is the key to doing tax season right. Now, a little bit of housekeeping first. Weekly Profit Talk is, as it sounds, a weekly event. We do this every single Wednesday at 8:30 Mountain Time. That is 7:30 if you're in Los Angeles, 10:30 if you're in New York or Florida. So tune in each and every week. Also, this is a question and answer. So we are coming to you live on 3 different media channels. We are using Facebook, LinkedIn, and YouTube. And any one of those has a comment section. You post a question in the comments, and we'll answer it live for you. So, in the absence of anybody with a question at this point, let's launch into the key to doing tax season right. So, it's kind of a bold subject matter, but the plain fact of the matter is that most entrepreneurs, even my physician practice owners, um, may not be doing this correctly. Taxes are basically a very unpleasant experience. And many people, it's been my experience in the years I've been doing tax preparation, that taxes are viewed as a ugly necessity to be ignored as much as possible and attended to and absolutely necessary once a year. Now, I'm going to tell you that that's wrong. And what you want to do instead, if you're self-employed or even more important, a small business such as a partnership or an S corporation, taxes are a year-round event, and you must attend to your taxes at least quarterly. So let me share some information with you here, and we'll just go like that. So, what is so wrong with what you're doing anyway? Well, the problem is if you pay all at once when you file in the spring, let's say March, April, and you owe like $5,000 or $10,000 in taxes or more, and you haven't made any payments toward those taxes all year long, you're going to be subject to some fairly hefty underpayment penalties, and they are going up every year. I think the percentage is now at 6%. It might even be even a little bit higher. More importantly, though, taxes are an ordinary and necessary expense of your business. Now, I know we would prefer that they weren't necessary, but if you look at, I think it was it Justice Earl Warren that said that taxes are the price we pay for a polite society? I might be misattributing. It could be somebody else, but basically, they're here with us. They are constitutional. The guy, World War I guy, what's his name? Yeah. I can't think of the president back in the 1910s. It'll come to me while I'm talking here. But in any event, they are constitutional because of the 16th Amendment. So that argument doesn't hold water either. You've got to take care of it. And the thing of it is, taxes are a pay-as-you-go system. The IRS basically insists on that, and it's ugly but true. If you can recall that time during college or maybe shortly after where you had some kind of job, taxes were taken care of for you by your employer, who's required to pay half of your FICA for you, as well as withhold your half, and your federal, and if you're in one of the 41 states that has the sales tax, state tax as well. So if you are not paying as you go, then you're basically making money without paying tax throughout the year. And that actually ignores a generally accepted accounting principle. You should pay expenses in the same period in which you're making the money that created them. So if you owe all your tax all at once, and then you might find yourself in the unfortunate position of having to wipe out your savings or even apply for an installment agreement and paying even more money in interest on those installments. So they could, as I said, penalties could cost you even thousands of dollars. You do need to make estimated tax payments if you're going to be owing at least $1,000 in taxes, and that's not terribly difficult to do. So even if it's people will tell you that you don't have to make estimated tax payments if it's your first year in business. And that's true, you don't. But you want to develop good habits. And you also want to basically, again, make payments on taxes in the same periods of which you made the money. So it's a great habit to get into early. you need to know these deadlines. Take a screenshot of this, write it down, go back. We'll actually shoot you a replay later of this and freeze this. These four estimated tax payment deadlines are April, June, September, and January 15th. If one of those falls on a weekend, or sometimes the 15th one falls on or near Martin Luther King's birthday, then it'll be the next business day after that. Very important. You want to be conscious of all four of these tax deadlines. Now, we're getting into the fun part. To do tax season right, here's the thing. You've got an estimated tax payment deadline on April 15th. Well, that's also when you got to file your 1040. So the paradigm shift that I'm suggesting here is that when you file your taxes, you should owe little or no tax. And then the April 15th estimated tax payment is less burdensome for you. If you do that, then you're going to have a very little difficulty keeping this flowing, and you're actually making a shift, as it were. You're making a good estimated payment for April 15th and for the 3 periods afterward. And not only that, but if you do this right, especially the January 15th payment, because you've got your end of year numbers. So that means that you should be able to get fairly close to an accurate estimate of what your taxes are going to be when you do file them a couple of months later after January. Excuse me. So therefore, I like to shoot for a target of $1,000, either balance due or refund. If you can make it in there, you've made the bullseye. Bonus if you can do 500 one way or the other. Okay. Now, you may ask yourself, as Eric, how do you do estimated taxes? Well, you'd be asking me if you said Eric. Sorry. So to estimate tax, what you want to do is get a profit and loss analysis of the previous full month's periods prior to the deadline. The April 15th deadline, they expect you to estimate taxes based on the months of January through March. And the June, you want to do January through May, and the September, you want to do January to August. Now you can see these factors I've written here. You've got 4 and 2.4 and 1.5. January to March, if you multiply that by 4, you're going to have a full year. So you take your profit and loss for January, March, and multiply that by 4. That is an estimate of your year's income. Then calculate the tax for that. And there are a number of different online calculators, or you can shoot us a message and ask how we can work with you. We do this for our people all the time, and we love doing it. So you take that tax and then you divide that by the 4, and there's your estimated tax. And it's just that simple. You'll do January to May, that's 2.4, simply because it's 5 months out of 12. If you do that math, it's 2.4. And January to August, obviously that's 8 months, so it's 1.5. Calculate the tax, divide the tax amount by the same factor. And for the federal government, Google IRS Direct Pay and click the big blue Make a Payment button and follow the prompts. And that's it. So if you have any questions about this at all, please do shoot us a message in any of our social media. If you have any questions at all throughout the week, also if you comment them, we will read them live in next week's Weekly Profit Talk. And that is every Wednesday at 8:30 Mountain Time, 7:30 on the West Coast, 10:30 on the East Coast. So until then, we hope you have a prosperous rest of your day, a great weekend coming up, and if you have a chance, do something randomly kind for a stranger. So until next week, we'll see you then, and go forth and prosper.